A while back, I was put some videos together covering Andrew's Forex. And I got an email recently simply because I put videos of another trading system up, whether I thought Andrew's Forex was still decent. Now, it was about almost 3 years ago I put up Andrew's Forex's the videos covering it. And I got to say, not much has changed. I brought it up on my charts and just started popping through it. And it's actually still a really solid system. Anyone that's been trading the last little while, you've seen that we've had volatility compression in virtually every market. True with the currency markets. Right here is the Euro US dollar weekly chart. And you can see just by these lines here, we're in a range. Now, there are some trading opportunities inside of this range. But there's not as high as probability as you're going to get when you're trading inside markets like this. But then again, when we're in this stage right here, we don't know that we're going to start going sideways. When we're, in this area right here, some people may be looking to still go short. At this point, the down move is not over. Then we start getting these choppy sessions here, over and over and over again. These are weeks because each candle is going to represent 1 week. It's choppy. However, there are still on lower time frames setups using Andrews. And what Andrews does really well, I think, is it keeps you out of markets that are not really moving. We do have in this area right here, starting from here down to here, following the rules on lower time frames, we would start looking for trades in these areas. The rest of the areas, perhaps over here, depending on how the daily chart would look, we would start looking during this week. But again, it depends on the daily chart is. It's not just one time frame. So if we were just look at the Euro US dollar weekly chart right now, there is no trade opportunities on lower time frames. And this is how fast you can scan for opportunities, which makes it great for people that have day jobs. You can actually come in the market once a day and check the charts depending on what currency you're looking at. For example, this is the Euro US dollar. This is a Monday morning. I could come in this week and say, okay, well, look, there's nothing going on here. And it's going to depend how this candle closes. So I got at least 2 weeks before I'm going to look at the Euro US dollar for trades. This is the Aussie US. Same thing. There are some trading opportunities in through here on the smaller time frames and in through here as well. No. Yeah. Well, maybe perhaps in this one as well. Depends again what the daily chart looks like because we use the weekly chart with Andrews to determine our trend. And right here, in this area right here, there's nothing. And you can see we're going back and forth, up, down, bull, bears. It's just, there's nothing solid. This is the Euro GBP. And again, it's in this area here on the daily chart. We would have gone down and seen if there would have been any opportunities. Now you can just look at this chart. So once these candles completed here, it's in this area right here that we would be looking for long opportunities. Again, depending on what the daily chart looks like. Let's go to US dollar, Canadian dollar, a weekly chart again. You can see it's just all back and forth. It's not a whole, again, this is the US dollar CHF. Here's the British pound against the US dollar. And this week here, we had, on this chart here, we had 3 weeks of green candles. So we could look down on the daily chart for opportunities. So since we're on the GBP USD, let's just pop down to the daily chart and look after this candle closes what we're looking at. All right. So let's go down the daily chart. So when you're down the daily chart, one thing you're looking at, this line is actually on the wrong candle. It's actually supposed to be one candle over. Let me just get rid of that. So it's pretty simple, to be quite honest with you. What you're going to do is you're just going to drop down the daily chart. And you have to have an idea of what a pattern looks like, what a trending market looks like. And you can simply use a trend line. So on this one here, I've got a swing low here, obviously. Higher swing low, Bob. You're not going to connect these two. You could. But we're looking in the more immediate future, not way down here. So we could actually just go like this, in through this. Does it look like we are trending? Well, we're making this low, this high is obviously lower than this one, but we're putting in a higher low. What's this? Higher high takes out this high, higher low. So we're trending, right? That's a trending market, higher highs and higher lows. So we could actually look down on the 4-hour chart. Whoops. On the 4-hour chart, that was an alert system. That if there's any trade setting up, and you can see on this candle right here, there's a trade set up to go long. Now you see this short one over here? You wouldn't take that. Why? Because what the weekly chart was telling us is to look for long opportunities. There are a couple different ways you can take profits, a couple different ways you can place your stops. Just going by the basics, it's a 60 pip profit or a 50 pips and a 50 pip stop loss. Or you can just use structure. If you're going long on this candle here, let me just get a little pen here. If you're going long here, you played the break of that. You don't get triggered into this big candle here. Your stop would go down here. Looks like it's a lot more than 50 pips, right? May not be. Let's just take a quick look on that. So just say you got in at about 131.55. You're going down here to 30.53, right? So your stop, just using the 50s, is around this area right here. The good thing is, on this trade in particular, we're not triggered in this trade until this big red, well, it's a green candle. This big green candle takes off. So your stop wasn't even challenged. You just went right into profit pretty quickly. And if you're looking for your 60 pips, you know, you're looking at about, well, we're already at 60 before we got up here. That's actually just using structure. You can actually just use structure for your targets. Just shrink the chart up a little bit. And if you were just saying, okay, well, I'm going to play structure. That's what the Black Diamond Trader does. You could look at this area right here for partial profits, in this area up here as well. And perhaps up in this area here. Just be careful of these big wicks that are here. Maybe split the difference. You could do that. Either go through half or, oops, that's off the chart. You actually can't see that. Let me just close this up here. There we go. It's in this area right here and this area right here. So you can actually just use those for your targets. That's what Andrews is about. You can use structure, or you can use the set profit and loss. So you're looking, actually, if you got in this trade here, you know, it's a nice little rally. You're ending at 134.70 and you're getting in at 131.52. So that's a really nice trade. So anyways, let's just keep this short. Andrews is still viable. If you want to check that out, there's a link below this video here. And that's it. So I hope you enjoyed this quick little video. If you have any questions about Andrews Forex, just send me some emails and or a comment here. And I can cover it in a video if you like. All right. Thanks for watching.